All right, guys, what is going on? What is good? What is good? Welcome to the live stream. Welcome, everybody. Ooh, 40 people right off the bat. Wow. I am impressed. I'm impressed. But I guess I don't know. I don't know what to think. I don't even know what I'm saying. Let me just turn the music back on because that's fucking me up. Yeah, think straight. I need some music. There we go. Okay, that's beautiful. What's good, everybody? Welcome to the live stream. Today is Tuesday, right? Taco Tuesday. Unfortunately not. I had grilled chicken today, and I'll have it again for dinner, but it is Taco Tuesday. All right. October 1st, man, we are in Q4. Okay, so you should already have meditations. You should probably have already started it as well. And if you haven't, you're behind and you're fucking up. On day one, and you're already behind. Yikes. It's not a good look. It's not a good look. Not a good look. All right. But we're going to do our best. We're going to do our best, right? What's good? Naruto, G, Marvelous, Zokjo, Darth Quinn, Willow, Natasha, Toby, Mason, Marius, Eberneth, Marshall, Leon, Jose, Smalley, Bruce, 2020, Felix, Convicted Capitalist, Josh. Is it Ale or Ali? I don't know. Let me know which one that is. Pulled me a John today and rolled out of bed just a bit ago. Oh no, I was up. I've been up for a minute today. I've been up, I don't know, since right around 7 Central. What's good, Crocs, Shay, Sober October? I don't know about that, but more power to you if you are. What's good, Edgar, Grauberg, Alex C. Even I started reading it. See, that's what I like to hear. I don't want to hear that, oh, well, it's on my bookshelf. It's in my cart. I don't want to hear your fucking bullshit. I don't. Like, in all fairness, like, your excuses are nothing to me. Okay? And I'm gonna just leave it like that. If we go back to this morning, all right, 8:22, something like that. Let's go investigate. All right, let's investigate. It was somewhere, it's like 8:24 or 8:22, somewhere prior to our stock exchange open. I think it was this. 20,213.25. Right? And there was no upside objective. Okay. I'm not Twitter. I'm not your fucking, well, it could do this, it could do that. Sure, I say that sometimes when I don't know. But today there was a specific price level, 20,213.25. And when we got our equities open today, we rallied up. We had an imbalance here. And then what did it do? It fucking dominated lower. Like way just absolute carnage, right? From all the way up there. So, you know, it's not that difficult. Okay? It's really not. Yeah, you guys are wilding with that. No shave November, October, sober October, whatever. That's wilding. How about profitable October? Let's go with that. I know it doesn't rhyme. I don't care. Okay? So let's talk about it. Nasdaq, okay? I did not have a level beyond that. There's an imbalance here. There's Monday's low and probably a whole lot more that I didn't mention. Tuesday of last week's low, as well as Friday's low as well. So we snagged all of that today. So, you know, days like this, to play the other side is difficult. Like, to try and long something in here is a little bit difficult. It's not to say that it can't be done. I did it earlier. I ended up getting stopped out in profit. It was, I'll go ahead and tell you, it's pretty much break even. It wasn't insane. I got in late and I don't even want to talk about it. I will talk about it in a minute. It's on S&P and we'll get to that, but I wanted to get through Nasdaq first. So before we go, you know, and look at all the smaller time frames, okay, we have to look at the daily and weekly. So Thursday of last week, we traded up and into this imbalance. Now, this level here, I didn't talk about in the last couple of weeks, okay? But I did mention it months ago because that was this on SPY. I mean, not SPY, sorry, Triple Qs, okay? When everybody was shitting bricks back here, back in like May, or no, sorry, that's August. Dyslexic today. Back in August or even back in like July, right? I talked about this gap and this one up here. Now, we eventually traded lower, rallied all the way back up for this gap, came all the way back down, and then it took a while for us to finally get to this gap. But if you've watched every market review and you actually took notes, you would understand that this gap was mentioned a long time ago. Okay, but I'm not going to mention it every single day. You know, as we're on the way up here, I'm not going to keep telling you, oh yeah, this gap, this gap, this gap. Just have it there and leave it there, right? But you guys delete drawings, then you want to ask me questions like, oh, what did I miss? It's like, well, fuck, bro. I gave you that already. And I've already given you the rules way prior to September 26th. Not rules, but it's one of those things, right? Where if you have an imbalance and price cannot reach 50% of that, Okay, that's weakness. When it stays in the lower half, especially just one candle, we didn't like dilly-dally in here. We hit it with one candle and then traded off of it. So that on a daily time frame is a signature of weakness. So you have that going for you on the higher time frame. That's your Mufasa, right? Sitting behind Simba. Okay. And when you look at that, now from the broader perspective, okay, that was up in here. So what have you had on the way lower? Don't look at the lows, but look at all of the highs. Okay. The highs up here, high resistant highs. Let me just mark that out real quick since we're here. Might as well do it. Higher high, rip ass. In again, that lower half of the daily imbalance. Okay. We make a high here, we trade lower, we have a higher high here. What does that make? High resistant highs. We got some lows, or excuse me, we got low resistant highs here. And we eventually come up for that. Okay. Here. Came up for that. Then, leading up to this morning, what has taken place? We have a high from yesterday, evening session. Okay. And London took us higher, but we don't trade above that high. We trade off of it. And then on smaller time frame leading up to equities open, what do we have? That high and then a slightly higher high. Then we trade lower. So we have high resistant highs here. All right. So leading up to, again, equities, what do you have? Bearish price action. And you have multiple sets in history. Weakness on the daily displayed. High resistant highs. High resistant highs. And one could, I already know some of you are going to argue this or ask about it. You're going to be like, well, hold on, John. What the fuck? You have low resistant highs here. You do. Yeah, I would agree. I would agree. But look at where our equities open is, or like just prior to that. Look where that's at, where price is at. It's way closer to these lows than it is to these highs. Okay. And I don't even think ES had it too, and we'll get to all that in a minute. Dow at our open traded above this previous high right there. Now I was watching Nasdaq. I wasn't looking at Dow, but you know, looking at it now, right? Higher high on Dow, and Nasdaq could never make a higher high. It was trash. So weakness displayed on the daily, weakness displayed, you know, with high resistant high, or at least maybe not weakness, but like manipulation, right? Before the market goes lower, it typically goes higher first. And you see plenty of examples of that. I'll show you one more time. Okay. Before the market goes lower, it goes higher first. Before it goes lower, it goes higher first. Before it goes lower, it goes higher first. On small time frame. Before it goes lower, it goes higher first. Before it, I'm gonna say this one more fucking time. Okay. Before it goes lower, it goes higher first. See how that works? So, like I mentioned yesterday, right? At the very fundamental level of high probability trading, it's all about what? Getting in sync with order flow. Getting in sync with order flow. So if price is bearish, we would ideally want to short on the way up or right after. Meaning like next candle, or, you know, smaller time frame imbalance, something to that effect. Now this is a 1 minute chart, so I'm not going to show you anything like smaller than that, because I don't recommend to go smaller than a 1 minute for most of you. But nonetheless, that's what prompted me to say that this morning. Okay, that's why I picked that 20,000 213 level. Okay, a lot of weakness on the side of Nasdaq leading up to today. Okay, I'm not gonna brag and, you know, or pretend to be like, oh yeah, I told you 19,800 or 20,000 even. I never said any of that. Okay, I only said that level there. But it absolutely crushed. If you held anything, if you shorted and held anything, you dominated today. Okay, so you guys good with that? That's the information right there. Top down analysis, looking at the same ideas that I've already given you as far as the visuals, right? Downside targets, either low resistant lows or equal lows, right? That's here, low resistant lows. Drop down in the smaller time frame. Stop loss placement, high resistant highs. So I'm not going to tell you right at the highest high. Okay, there's obviously ways to minimize your stop. There's obviously, you know, ways of doing that, but that's where we're at, right? So you have an idea here that's like, oh, price, if it's bearish, it's going to have a hard time getting above that. Did it ever get above that? No. And it shit to bed. Same ideas. Okay, that's literally, it's the same idea. Okay, this was screenshotted September 3rd. Although I've been teaching this for, oh God, I don't know how many years now, you know, but you start trusting this stuff a lot more when you have experience and when you start seeing the same things working like 2, 3, 5 years after you learn it. Okay, and that's why I have the confidence to do things like that. Things like, oh, I'm going to say 20,213 and a quarter, and then it rocks, because it's so simple. Like literally, it's simple. It's just low resistant lows after a large series of high resistant highs. It's not that difficult. I promise you can learn to do this too. I'm convinced. Okay, I can't promise you will, but I'm convinced that I believe you can. Okay. Oh, you're wilding for long in Nasdaq. Absolutely wilding. I mean, I'm not gonna tell you how to trade, but I would not personally. So let's take a look. Let us take a look. So weekly imbalance, sure. You do have some old weekly gaps in here too. So that there might be, you know, I would say there's probably some interesting things within that. So, I mean, dude, I'm not going to come in here. Actually, I'll just mark the larger one. I could see that being a little bit of confluence there to a degree, but intraday, this is garbage. This is garbage. Any sort of trailing stops here and here that got yoinked already. And we have seen almost no bullishness to the upside. Like none whatsoever. So this low of day, that's the morning session low as well. That's probably going to get wrecked here in a few minutes. So I wouldn't short this, to be fair. I wouldn't short that. But this just does not look bullish to me in the slightest. Great question, Smiley. So they asked, in days like today, I can't see the difference when I'm trying to catch a reversal and when I'm trying to catch a falling knife. I've done that and I've been cut a few times. Should I then focus more on higher time frames than the 1 minute? Smiley, that's the whole point of the top-down analysis. The whole point is to start on the daily and then work your way down so you're in sync with higher time frame. When you align the higher time frames with the lower time frames, you get absolutely disgusting trades like this. Okay? You get stuff like this. Being able to short that imbalance. You're shorting on the way up. And that's also the high of the day, at least in the equity side. Right? And that's because you're shorting a smaller time frame bearish concept. And all this looks fucking gross. But you're shorting a smaller time frame concept that is in alignment with the higher time frame. Okay? And that's why you see that monstrosity. I mean, Jesus. Our current range of the day is 447 points from that imbalance. Like, that's fucking killer, dude. That's disgusting. So, to be fair, though, even from that imbalance to the level that I told you, that would have still been enough. To be honest, that would have been enough. You wouldn't have needed the rest of it. Although, I already know what all of you are thinking. Oh, that's stupid, John. You're telling me on a day like this not to catch the whole range? I mean, if you only trade one contract, it probably won't happen, but once in a while. But if you trade 2 or more contracts, yeah, you're allowed to hold one for the rest of the day and see if you can get the majority of the day's range. Nothing wrong with that. But you trying to catch home runs every single day is not going to turn out well for you. And you're not going to take partials because you ignore everything I tell you to do or that I tell you to consider to do. And then you're going to just break even and take losses because your winners aren't going to run as far as you think they are. And then since you don't take profits only but once in a while and you don't partial, that's literally going to have an opposite equity curve of what you want. You want something like this, right? Big win, small loss, big win, small loss, big win, small loss, or something to that effect. And if you only try and catch the majority of the day's range, you're going to take like small loss, break even, small loss, break even, small loss, break even, break even. You see what I'm saying? And every once in a while, you'll get that big win. You'll get that big win and be like, oh yeah, this I'm awesome. And then the cycle starts over again. Break even, small loss, break even, small loss. Until that's not what you want to do. Okay. But hopefully that answers your question. Okay. You align higher time frames with smaller. If you can't do the 1 minute, then stay off of it. But then you can't, bitch about me getting 1 minute time frame entries. And then you're like, oh, well, why didn't I trade that? It's because you don't look at that time frame. So, that's what makes trading unique, bro. That's what makes everybody's career so different from each other. Because we're going to trade different time frames, different concepts for different models. Some of us want to add to winning positions. Some of us want to, have wide stops. Some of us want to have tight stops. There's it's everyone's, journey is unique because of all those things plus more. But again, at the end of every day, I'm just telling you what I like to do and what works for me. So can we get a sound check? Drop a 1 if you guys can see and hear. Can we get an audio and visual check real quick? Oh, fuck, I'm out of water. Damn it. I didn't grab a water before to fucking... Oh, well, we're going to power through it. We're going to power through it. All right. Thanks for the sound and visual check. Appreciate that. If you want to long and another index still has equal lows, would you still long? No. Usually, no, I would not. G said, if we have a bearish day like this, haven't had this kind of down day for a while, what are your expectations for the following day? Or is that too vague a question? It's not a vague question. Okay. And look, I'm going to tell you that the charts are going to tell you more than I can. Okay. Well, probably not, but the charts will show you the way. Okay. They'll show you the way. What I mean is, this is a concept that originally is from Larry Williams. And I taught this in episode 19. You guys know what that is. Pipaholics Anonymous, please trade responsibly. Rest in peace. Actually, it's on a Google. I have it on a Google Drive. But anyway, what I taught was like the market is like a pair of lungs. Okay. You breathe in, you breathe out. When you breathe in, your chest gets bigger because your lungs are filling with air, right? And when you exhale, you get smaller because the air is leaving your lungs, right? So when you breathe all day, you know, there's expansion, contraction, expansion, contraction. And the markets work the same way. So what I'm trying to answer your question, I'm referring to the idea that after a large range day or a series of large range days, it's typically followed by small ranges. So that's what I mean. If you look at back in September, okay, September had a nasty down day that hadn't been, you know, it hadn't been down like that in a while. And what happened the next day? Small range. Small as in relevance to the large range. You know, that's still a decent range, but in comparison to the larger range, it is much smaller. And then the day after that, small range. And what happens after small ranges? Large ranges. Okay. So you can backtest this idea on whatever time frame you want, but you know, I think the daily is a good time frame to start with this idea. Small ranges, large range. After a large range, small ranges. After some small ranges like today, large range. Okay. And so it flip-flops from large ranges to small, large to small. Sometimes it stays large for a little while. Sometimes it stays smaller for a little while. But it, you know, ping pongs back and forth between large ranges and small ranges. So, you know, there you have it. So after today, I don't know. I don't exactly know. Just based on the daily time frame, I'm not entirely too sure what to expect. We have those levels outlined, weekly imbalance, this old gap that's inside of that. This is ass, but you have some old up candles here that we also ran into. So, you know, we might have an update tomorrow. I'm not sure. But for now, I don't know. I don't know what to expect. Okay. What I would wait for is what I always wait for. Low resistant highs, low resistant lows, you know, these things. Okay. Low resistant highs, equal highs, low resistant lows, or equal lows. And then on the way there, okay, here's a big fucking key for you. Okay. Yeah, I know, Ricky. I'm like, oh, that's going to short and it fucking runs. Embarrassing, right? But here's a big key for you, okay? With any trading model that I have, okay, everyone's model, you can tweak it however you want. I'm going to give you a model in the video or series, I haven't decided yet, on how to get funded. Okay? But I can tell you already, that model is not a complete model. It's more like a skeleton. Okay? Skeleton, it's going to have structure. You can tell, oh, that's a skeleton, right? But you're going to have to add some meat on those bones. You know what I mean? And again, we'll get to that when we get there. But either way, whatever model you choose to use, I would still incorporate these ideas. Whether it's an imbalance model to go higher, if it's going to go higher, for me, it's got to be low resistance highs or equal highs. If it's a mitigation model to go higher, it's got to be low resistance highs or equal highs. Okay? Whatever model you want, whatever model you call it, because so many people, you know, take models and they call it different shit. Who cares? But whatever you decide to do, these things here are, in my opinion, universal. It means it doesn't matter what your entry technique is. These are still going to be targets. This is still going to be stop loss placements. General stop loss placements, not the precise ones. But those ideas, trust me, are good enough to get started. Okay? Stasco remembers that? Dude, that was a long time ago. That was a long time ago. But I still got it. You're 16 and planning on starting trading? Nice. Very nice. I didn't start that young, but I'm 30 now. So in 14 years, you'll be as old as I am, which is kind of cool. I guess we can do, we can go look at S&P now. Just so I can talk about it because I said I would. Right in here. Okay. This is what I was doing. So here's a prime example of what I'm talking about. Like for a model that would utilize, okay, if I'm bullish, for example, okay, then it's got to be low resistance highs or equal highs, and the stop needs to be formed, like the low has to be set, right? And that has to be in the form of high resistant lows. Okay? So if I can find one of these two as an upside with this as a low, then all I have to do is find something between the low. Let me draw this out for you again. Between that low and the highs, okay? Something that's on the way there. Okay? Something that's on the way there. This is my target. Well, actually, it was way up here, and I'll get to that in a minute. But for you, okay, and learning how to trade, learning how to predict price, because I don't, you know, we don't do none of that fuckery of, oh, you can't predict. No, bitch, we predict, okay? Lower low here, that makes a high resistant low. So we have an imbalance back here that was created on the way down. Okay. I'll just include all that in this particular example. So we trade back into it, trade off of it a little bit. I mean, nothing crazy. Then we trade through it, right? So this is not bearish. Okay. This is no longer bearish. That gets traded through. Okay. So then this either becomes an inversion that I can long, or if price is in a hurry to get where it's going to go, and it may not give me a retracement that I want, right? It may not come back into that inversion. You see that it never did. But I still want, a lot of the times when I look at order flow, I'll still look at that and be like, yeah, that's there. Okay, great. Because what's next? in this segment of price between the low up to those highs. What's next? When we traded higher, we traded past what? The 50% level. So what does that mean? That means we're in a premium now. Okay? That means we're in a premium, but we can still look for potential opportunities. Because as long, and we're going to get messy here, and that's welcome to fucking art class. Okay? I used to love that shit in kindergarten. If I showed up and we had just blank sheets of white paper on the desk, oh man, that was a good fucking day. Our teacher was like, oh, just do whatever you want day. I'm like, fuck yeah. All right, today we're in coloring class. All right, we're in drawing class. Fuck around and draw some shit. This is the discount end. Okay. This is the discount end of the premium. All right. It means, yeah, the market isn't a premium, but at least it's at the discount end. All right. Zoom in. Oh my God, I just reminded myself of a reel I sent to a friend of mine the other day. I'm fucking dying right now. Anyway, this imbalance here, right there. See these two? We dip into it there, then we dip into it one more time. What do we never do? We never trade without a stop loss, John. Well, you're right. But what does price never do here? It never reaches halfway. Never reaches halfway. What does that mean? It means we're fucking bullish, bro. Market rallies, retracement, rallies, sends for the highs. Now me, okay, I got greedy because that's how I am sometimes. You fucking hold winners, right? That's what they say, hold winners. And I was like, all right, I'm going to keep this bitch going. I was like, I'm going to keep going. For this lack of wick here at 905, that's what I wanted. Didn't get it. And also, that 5-minute lack of wick is inside this gap that is presented on the 15-minute. So whether you want to call it a 15-minute imbalance or a gap or a volume imbalance or whatever the fuck, either way, that's where I'm like, yeah, price is going there. Like it's going there. But the way of how we got there, okay, this is what happened. All right, I'm like so close to that. Then we dropped lower, then we rallied a little bit. Now by this time I told myself, you know, lunch is coming up, I'm gonna jam my stop up. So I ended up becoming the liquidity today. And look, I'm not perfect. All right. It was I got stopped out in profit, but nonetheless, this is what happens when you enter trades late. And if you move your stop too early, or you don't take partials, like I said, this is what tends to happen. The market comes back, small time frame lows. But what does this end up becoming? And I wasn't willing to hold through that because now that's 11. I'm not trading at 11. But what does that end up becoming? The 5-minute mitigation, which has already been labeled for you. And that, my friend, is also an imbalance here. So that makes the mitigation model right there. Hits that, runs right for what I wanted earlier. So had to cry myself to sleep on that one. But what do you expect, man? What do you expect? My stop was like right in here. Right in here. So let me just take everything off because, you know, our class is over with. Let me just double check Nasdaq real quick because I still don't think we made a low of the day. And if we did, then I'll be wrong in that regard. But let me come in here real quick and give you an example. You have, let's mark this up again. You have this inversion here. Okay. You have a imbalance there. If you measure it from that to the gap. Now, if you measure this one too by itself, then there's two. And what have I always told you about trading with two imbalances? What have I always told you? What have I always said? This is bothering me. I need to see if this hit or not. I'm sorry. I wanted to mark this up. I can't tell if that hit or not. I just have to do that real quick. So it did. 749 and a half. 749 and a half. Jesus Christ, that's fucking perfection. What have I chat? What's the answer to that question? When you have two imbalances, how do you trade them? So high low. This is day higher low session higher low, or even if this is, let's say, London high. Hold on, I don't think I understand your question, my friend. The low I had here earlier, let me come back to the 1 minute in just a minute. The low here, I don't remember which one I measured. I think it was this one. I think it was that one. Yeah, that's the low of Friday the 24th. This one here. It cleared all of these lows. Well, it already did that, but I'm saying these three lows were the last ones that were left open below Monday. And so that is why that one had its thickness like it did, because I wanted to have that reminder that it was that right there. Okay? But what's the answer, chat? Trade the first one, entry at first, stop loss below the second, stop at lower one, or take one at each one. It's fine. Second one, and note the 50% of that imbalance. Entry at first, stop at second, or you can enter at both with the stop at the second. Right. So what's the trade then? Long at the imbalance, stop at the low end of the second one. 1 to 2, 1 to 2. It's good for me. It's good for you. But John, you didn't take the 1 to 2, bro. I fucking know I didn't, bro. I know. Because I tried to get that. I tried to get a little bit better, in which it did, but I moved my stop too early and I wasn't willing to hold it through lunch because that's right at 11. I just wasn't willing to hold it. So you're right. But I never came out and said, I take perfect trades and I never get stopped out prematurely and I'm never wrong. I've never said that. So allow me my imperfections, okay? Allow me that, chat. But there's your 1 to 3. The equal or the low resistance highs right there. That is your 1 to 2. By rules which you already know. Ain't that something, chat? Does that not give you confidence, chat? Where we go over the same things. Oh yeah, John, I remember you talk time and time again. When there's two imbalances, you take the first one with a stop at the second one. Well, there you fucking go. There you go. It's right there. Why do you think after we got this run or a little bit later, at some point in the Discord, I said, oh, we had clean price action on ES on the 5-minute/1 minute. This is exactly what I was referring to. All this. Okay. I didn't tell you about that gap or that imbalance here, but you know, I was looking at that just a second ago to see, and that's not bad. That you probably wouldn't have got filled there, but it's good to know that that's there. Okay. And that was about it in that regard. So a 1 to 2, if you risk 1% and make 2%, that's it for the day. And you're closer to passing your funded challenge or your combine. Okay. Even on a day that rocked everyone, anybody who's been long going into today, they got wrecked. Okay. Because this is like a 70-point move on ES, 75 actually. Right. But still high probability scalps with decent risk reward ratios. Okay. Decent risk reward ratios. So, God, this PM session is probably going to not be great. We've had such a large range today, and it's hard to tell where the stops are at. This was easy because we just kept going lower and lower and lower and lower and lower and hit a higher time frame target, and we had an easy set of low resistance highs. That's already been met. So now that we have that, because part of me feels like this run was not enough for a real stop run. That's one thing. And I'm looking at it now, okay? And sure, we made some lower lows, we have an imbalance, we traded into that and we're higher. And that's fine, but what's the target though? I mean, is it these highs here? I guess I could see that, but I don't know. It's just not as obvious as something like this. Okay. And let me give you a perfect example of what I mean by that. When I get to the charts, okay, and I tell you guys I'm looking for the lows, the highs, whatever, the easiest ones to spot is something like this. Something like this. Why is it so easy? Because look at that, right? I mean, just literally look at the chart and it's distinctive. It's a very distinctive high. It's a very distinctive lower high with a bunch of other price action around it. When I talk about something like this and it's sort of like nested in there, because mine and probably everyone else's eye goes to this high and then this one. Okay? Because this one's kind of just nested in there. So are you picking up what I'm putting down here? These are obvious. These are not as obvious. So drop a 2 if you guys are understanding what I mean by that. So if I look at something like this and it's not all that obvious, it's kind of like it's hidden back there, it makes you work a little bit for it, I don't trust it as much. This, the path of least resistance, right? Quite literally on the way up. But I'm referring to the path of least resistance as in if everybody else is getting to the charts, what's everybody else seeing? And everybody else is a whole lot more likely to see this than they are to see this. Okay? So that's why I trust something like that. And I don't trust this. Okay? Could we trade to that? Yeah, we absolutely can. And I'll be wrong in the assumption that we might go lower. I'm not in a trade right now. That's not going to hurt me. You know, I might hurt my ego a little bit, I guess, but it's not even real, you know? Like that's not even real. So Nasdaq, same thing. We had a low and then a bunch of lower lows in here, and then we got that spike through it, and this ended up becoming a mitigation play. And this is hindsight. Again, you know, I told you I think it's going to go lower. So, you know, in hindsight, looking at it, was this like 1230, and then 1233 trades into that imbalance here. So the earliest available entry would have been this. A little bit of drawdown, and now it's higher. And this is also inside of the levels that we outlined earlier. One of you brought up the weekly imbalance, and then I also told you about this larger gap here, which is a little bit more defined than the gap or the weekly imbalance. It's larger, and redefining that a little bit, you know, cut that range down. So that's something to study. If you want another studying exercise, not that you probably haven't done the other ones either. Hold on, wait a minute, John. What was the exercise? I missed it. What the fuck you mean you missed it? What do you mean you missed it? Look at the chart. Look. Okay, if you want something to backtest, if you want something to study, I just gave it to you. Look at concepts, or look at your trading model and see not just when they form, but where they form. This mitigation and imbalance, it's inside that weekend gap. And that weekend gap is inside of that larger weekly imbalance. So that's kind of like nested in here. You see how that works? So we'll just take a look at ES as well. All right, chat. I guess it's probably too late, but I guess this is going to go higher. Okay. So, you know, whatever. Whatever, chat. I ain't going to say I told you so. But there's a gap right here. Imbalance here. Lower lows. Just like Nasdaq, we traded through that up candle back into it, but the imbalance wasn't formed until that 1232 candle closes, and that's what makes that the imbalance. One thing to study too, I've already given it to you, but probably won't do it unless I tell you to. 50% level was tagged, but the imbalance did not trade all the way in. A portion of it is still open. And although to me, it's not as bullish as leaving the 50% open, if it leaves the bottom half open, that's a bullish signature. So you're welcome for that too. There's 57.63. So if you were long from earlier, if you faded me, you did well. All right. How about that for ego? If you faded me, you did well, which is cool. But that, even if I didn't stream today, even if I was watching this, I can almost guarantee you I still wouldn't have traded that. I still wouldn't have done it. Okay? But now that we're near the end of the stream, I'll give you this. Entry at the imbalance, which is the mitigation model, or at least a reaccumulation model if you want. If a stop went to the low of this down candle here, the 1 to 2 is right there, which is beautiful because that's still shy of these highs. So there's a 1 to 2 that I took earlier and fucked up the management. So you're welcome. You can learn from my mistakes. And here's another 1 to 2 that was offered, even though I may not like it. You don't have to. You can like it all you want. You can say, oh, no, John, I think that's beautiful. Print it off then. Study it. That's fine. One of ICT's charter said he noted sell side as well. What do you mean? Oh, like a new low of day? Yeah, I don't know. Oh, well. Hey, look, I get it wrong sometimes. And that's okay. But if I was looking for scalps, I guess that would have been okay. But I'm not going to bitch about it. I might go into my journal and rip my journal a new one. Be like, journal, today I was a fucking goober. I was a goober. That's all right. It's only Tuesday. It's only the PM session. All right. But again, same thing. Those are, I think I failed to mention that earlier. Small time frame equal highs. This high is slightly lower, just like ES. Beautiful. Just like that. All right. But there's the last thing I'll give you. Okay. This mitigation, this imbalance. Okay. Go on your chart because you won't remember if you don't fucking do this. I don't even remember which one it was. You should put the dates on there. I'm not going to do that for you. I already do enough for you to begin with. Should I do more than enough? But go and find out what those dates are. Put the dates on the chart. And what I would do, well, scrunch this up first of all and get a little bit more wiggle room in here. And well, that low is, I wouldn't bother with it. But what I would do is take a, there's a note tool in here somewhere. The call out. Okay. And oh shit. When I post in the Discord like that, that's what I'm doing. I'm posting the note. Okay. And I would say mitigation inside weekly gap. And then move it over like this. So that way the bubble, like when you move it and it's all like janky like that, I move it over to where it's very clean like this. Okay. I don't want something like that. I think that looks tacky and I don't like it. But something like this is beautiful. Okay. So I would screenshot on your chart. I would screenshot this right here. I lied. We got to label a couple more things. This would be bottom center. Okay. Now that weekend gap line is there, and I don't want the lines to overlap with the text. So I would do something like this, but this right here, okay? This right here is a beautiful example. Some shit like this, I would put in the market review, which I probably will because we do that later today, or I do that later today. But note all of that stuff. Sorry, that we'll make it blue so it's more distinctive. High resistant lows, mitigation model, imbalance, which is good for trade management, sends for liquidity, and then we actually take lunch high as well. If you want to label lunch high, you can. But I'm not saying you need that high. I'm just saying from this to that is enough. Can you get a 1 to 2 out of that? Of course you can. Even with the lowest low. Your 1 to 2 is right there. You see that? You don't need the 1 to 3 or the 4. I mean, I go for them sometimes. I do. I ain't gonna lie to you. But you don't always need that. There's some nice 1 to 2 opportunities in here. Okay? And that's that. So again, in closing, go to your own chart, mark up that weekly imbalance that one of you mentioned. I think that was Alex or somebody. And I give you the weekly gap that's inside of that. Go mark those up. Mark up the high resistant lows, the mitigation model, the late imbalance, right, which is the imbalance prior to the liquidity run. How do I know when to move my stop? I'll give you one more thing in closing because I love you guys. When the market starts to take off like that, at that imbalance, I would immediately go right to that low or the low end of that imbalance as a trade management technique. But that's just me. All right. Okay, so capitalist. Was I wrong though? Well, on my trade, I got stopped out prematurely. It wasn't a loss. You could say I was wrong. But me being wrong on the bias going lower, I didn't even do a full analysis. I just said, hey, this doesn't look bullish to me. It doesn't. Shit, it still doesn't. Still doesn't look bullish to me. And then zoom out and look what we've done. Look where that mitigation model occurred. Fairly close to the low of the day. Not at the low, but fairly close to it. And that's a nice expansion. Okay? So that'll be it, man. It's Q4. You know, it's day 1 of Q4. You got books to read, you got charts to print, you got trades to journal. All that stuff, man. And I know it can be a lot. One of you said you were like 16 years old. You got plenty of time to learn this stuff. But if I were you, I would learn the things I'm telling you to look at. Because that's how I trade. That's how I take killer trades. Okay? And for those of you that stayed the entire time, I'll end it with this. These ideas is how I got funded. I'm also a funded trader. So bam, secret's out. There you go. Okay? That's why I told you I'm going to teach you how to get funded. Because I am. So there it is. Okay? So there's that. Y'all be good, man. We'll be here. Same time, same place on Wednesday. I will put out the market review later tonight for you guys. So be blessed. And I will see you tomorrow. Look at that move. Beautiful.